Welcome to The Explainer. Today, we're unpacking the historic 2026 crash of the Indian rupee. Let's dive right in. The scale of this shock is absolutely massive. By May 2026, the rupee hit a staggering record low, 95.80. Down 6.5%, this historic plunge literally made it Asia's worst performing major currency. Crazy, right? What's wild is the contrast here. While India plummeted, export-heavy economies like China actually saw their currency gain value. You know, this long-term slide, it's actually a deliberate structural feature designed since 1991 to help boost Indian exports. So, what changed? Well, a unique collision of immediate shocks completely accelerated this gradual crawl into a perfect storm. Look at this timeline. Conflict erupts, oil surges, tariffs hit. It triggered massive panic and sky-high dollar demand. So let's break down the 4 exact catalysts behind this rapid freefall. First up on the list, oil spikes. Crude oil suddenly spiked well over $100 a barrel. This instantly widened India's trade deficit significantly. Because India imports 85% of its oil, this massive price hike literally just drained their dollar reserves. On top of that, new 50% U.S. tariffs on exports severely choked incoming dollar flows compared to competitors. Then, panicked foreign investors yanked over $20 billion from equities, massively exacerbating the currency's overall weakness. Finally, narrowing interest rates made U.S. bonds far more attractive than Indian debt, totally accelerating that capital flight. But hey, the central bank isn't losing control. They intentionally operate a crawl-like system just to absorb these shocks. As the governor noted, the RBI manages the fall's speed, letting the markets actually determine the ultimate direction. To curb extreme volatility, the RBI stepped in and deployed its massive war chest, selling billions of dollars. So who actually wins here? Well, while importers and airlines suffer immensely, tech and pharma exporters win big. Here's a surprising side effect. Indian investors flocked to crypto as a hedge, boosting adoption by 25%. So I'll leave you with this. Is this a crisis or a necessary adjustment for India's export ambitions?